Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant. I'm the host of the Smart Property Investment Show. Welcome in our 10th year of recording this podcast. I've said it before, everyone thinks podcasting's a new thing. Well, it's not. We've been doing it for a decade and navigating what has been a topsy-turvy property environment all the way through the COVID pandemic, restrictions for investors put in place by APRA, discussions around mortgage buffers and restricting lending. We've done it all, and we continue to keep our finger on the pulse of what's happening in and around property so you can make more informed property investment decisions. You're probably sick of hearing me talk about mortgage brokers over 10 years. Yes, every single mortgage I've had, I've got a mortgage broker to put it together. Yes, you'd be mad if you didn't use a mortgage broker. Tried and tested, well-worn phrases from me, but there's a good reason why. 75% of Australians use mortgage brokers to secure finance, whether it's for investment properties or for owner occupied. So decided to go to the source rather than just hearing about me plucking out figures that I probably don't know too much about. Someone actually knows what's happening in and around mortgages, and that's the CEO of the MFAA, Anja Pannek. She's in the studio. We're going to get stuck into mortgages, all the things that are good about them, maybe some challenges facing the mortgage broking industry, and also some sentiments and insights around property investing. How you going, Ada? Good to see you.
Lovely to see you too, Phil. Great to be here today.
So what does the CEO of the MFAA do?
Now, that is a good question.
It is. I'm a simple guy.
So maybe I'll talk about what we represent. So we're the peak industry body for mortgage and finance brokers. And really what we do is we champion mortgage and finance brokers across Australia. But what that really means is it's championing their clients and their clients' access to finance, to choice, and the benefits of competition that we know mortgage brokers bring to the Australian lending market. So whether that's regulatory settings, whether it's promoting why wherever you are on the property ladder, you absolutely have to go and see a mortgage broker, highlighting that this is an incredibly regulated industry. And, you know, I think you'd just be crazy not to use a mortgage broker in Australia today.
I agree.
I hear.
and I would imagine most of our audience or our listeners, our viewers would agree to that, and it sort of comes through all of our surveys and stuff. So we've got about 40 minutes together. I want to talk about mortgage broking, maybe using mortgage broker, that particular sector, because it's important, but then also some views and observations around home ownership in Australia. So you've been at the helm of the MFAA for 3 years, MFAA being the Mortgage Finance Association of Australia.
Yes, very good.
Okay, one of, I guess, two bodies representing mortgage brokers in Australia. And I've been in and around mortgages for about 20 years, and I've seen it evolve. It's heavily regulated now. Mortgage brokers act and operate under a regime. Maybe you can explain a little bit of what those things are, just to give our listeners a bit of confidence about using a mortgage broker, because every now and then it pops up in the media around mortgage brokers. I think the Fin had a crack at them again about 2 or 3 weeks ago, where some journo was saying, I spoke about it, that why don't we just get rid of mortgage brokers and therefore people will get cheaper mortgages? You hear this time and time again.
Yeah, exactly. So I think we've all got to remember is that when you deal with a mortgage broker, they've got your best interests at heart and they're legally bound to do that as well. That's under regulation. The same isn't the case. In particular, if you're dealing with large behemoth lending institutions in Australia, like they're very much led by shareholders overall. When you talk about the regulation that brokers operate under, it's all consumer focused. They operate under a mortgage broker best interest duty, responsible lending. What many people don't realise, and as well, is that the mortgage brokers are more regulated than if you go into a branch and you deal with a bank branch employee on every aspect of what they do. So you can actually have more confidence going to a broker. And it's all embedded in regulation. And, you know, I can say this, no, that sounds good, but what about the impacts? What we know at the MFAA as well is that brokers are doing a fantastic job. Now, we see that because what we do is we track complaints to the Financial Ombudsman, and they're next to nothing. Every time I catch up with AFCA, it's like you can pretty much count them on a couple of hands. So brokers are doing an absolutely awesome job. I think the other thing to remember as well is, like, if you sort of rewind, you spoke about mortgage broker market share sort of, you know, it was around probably 50%. I think that was about 2010.
That's about right.
Yeah, it got up to shy of 60% during around about 2020. It's now close to 77%. Now, this is an industry of small businesses, small and micro businesses. They get their business through repeat and referral customers. And if you're like me, what do? If you love working with someone, they do a great job for you, helping you, you refer them on. And that means mortgage brokers across the country are doing an exceptional job because we just continue to see more and more Australians choosing them as well. So I think you've got choice, you've got competition, you've got consumer protection. And, we sort of reflect on the last probably 3-4 years where it's been pretty chaotic from an economic perspective. I don't think Australians would be in as good a position with their mortgages if it wasn't for mortgage brokers. I know that's a pretty bold statement, but mortgage brokers have been out there helping their clients going, okay, when you come off your fixed rate, let me save 30, 40 basis points off your mortgage. Let's consolidate your debt. What do you need to do now? Let me help you budget. Yeah. So there's a whole variety of different things that brokers have helped Australians out with as well. So, but, I think there's still a lot of Australians out there that would benefit from spending time with their mortgage broker.
I think they would do, and I think it's a fair claim that you make there. Through this last cycle with the interest rate rising environment and now a bit of stability now coming down, brokers have been the doctors and nurses of Australia's debt and finance, right? And often the forgotten aspect of it all. People just assume – people don't want a mortgage, by the way. So if you're able to get it and secure it in a way which facilitates all the outcomes that you want. Now we're talking to a cohort of property investors here, but mortgage brokers sometimes get the wrong end of the stick. There's still a lot of misinformation, whether it's nefarious in the market around mortgage brokers, and I could probably say that. You can't say that. I still sometimes question where and why you see these stories coming through the papers around, mortgage brokers being a roadblock for cheaper mortgages in Australia. I think it's just bonkers. And I question the motives of those things sometimes, probably outside the scope of this conversation. But whenever I talk about broker market share, I always use your stats, which come out monthly?
Quarterly. Yeah,
quarterly. And I've seen that sort of rise. I remember knocking around this space when I was a young journo, and mortgage broker market share was like 33%. That's the number that's probably ingrained with me from 20 years ago. So you asked a question, why is it now 77%? And there's good reason for it. You spoke to it around customers. And I remember when the Royal Commission happened, you were probably in mortgage aggregation land at that point in time. We did a big report around it, which pretty much said, why do you use a mortgage broker? And if mortgage brokers didn't exist or you had to pay for a mortgage broker, people just went, I wouldn't use a mortgage broker anymore. So it really reaffirmed the input and the emphasis that mortgage brokers add and offer all Australians, whether they're investors or owner-occupier buyers. So I think we're beyond that largely right now. But people still go to the bank branch. And I sit there and question it, to your point around acting in best interests. Why would you go to a bank branch where you're going to meet someone who may have done a 3-month course inside of a bank who is incentivized for recommending mortgages, and there's a lot of issues around that. I won't go into that on this podcast. And you may get 2 or 3 products that may suit you, and you may not get the advice that you should be getting around structuring and everything like that. Like, you'd be mad to go into a bank branch. And I still question, who are the 25% of people that still do that?
I think, the important, there'll always be, I think, some degree of the Australian population for some reason. And, we talk with a whole variety of different stakeholders when we advocate on behalf of industry, right? From government to Treasury to ASIC. And one of the first questions we always ask is, have you ever used a mortgage broker? It's a little bit of a litmus test as well. And even in the 3 years I've been in this role, I think when I first started, it was more common for people to say, no, I've done it myself. I very rarely get it now as well, because I think the value proposition, not only is it the element of trust that we see through market share, but I think it's the professionalism of the industry as well. And that, you can't underestimate that. And, that's a big part of our job, I think, just to continue, like in the way that you do as well, to promote why it's so important. It's a great industry. It's highly regulated. There's full transparency. You get choice. Like, the market works better. Like the lending market in Australia, can you imagine what it would be like if we rewound 30 years? You've got four big lenders, let's face it. We've got the big 4 in Australia. Now, mortgage margins, the amount of profit the banks were making back then, was it 3%? That has shrunk significantly. Yeah. Deloitte did a report they released earlier this year which actually showed that correlation between mortgage broker market share and bank margins. And you can clearly see the impact as well. And that benefits everyone. If you're looking, if you're looking at investing, it's not just about price as well. I think what we see, brokers have come into the market. If you want product innovation, the fact of the matter is that no single person, I don't know anyone who's a vanilla borrower, anyone, whether you're investing or a first homeowner. Now, you're not just a number. You want to go to someone who actually understands you and has got the experience to deal with aspects of your financial life and not just have done it like, maybe one loan a week, but have done hundreds and thousands of loans in the way a mortgage broker has over many years of their career as well. Getting that very personalised service, I think that's a big part of the value of seeing a broker as well.
And I completely agree with you that no one these days is vanilla, and even a lot of banks are looking to digitise their mortgage offering, and I think there's now a level of maturity after maybe a couple of years where people are sort of scratching their heads, going, "What are the lenders up to?" At least the lenders now, the major lenders, are saying, "You know what? Like, yes, we're going to do digital mortgages. Yes, we're going to prioritise our proprietary channels, which is bank branch channels or their own mobile lenders, and yes, we're also going to prioritise mortgages." There's three arms. Mortgage broking. There's three arms, and let's be mature now and say we're going to try and be good in all of them. And I go, that's okay. That's all right. But it's still going to come down to the optionality of what works for the consumer and the client. And at 77% market share, you would think, well, is that it? Like people who haven't yet chosen to use a mortgage broker, what's it going to take in order for them to actually go down that pathway? There's going to have to be some sort of flashpoint in their own personal lives or some inflection point, which means that, mortgage broker share goes up over 80. I'll ask you that question. How high will it go?
Well, there's a fair amount of momentum. I think everyone I talk to, and I talk to a lot of mortgage brokers, they're extremely busy. Yeah. I think we've seen challenges around policy, which has made it hard for borrowers, A, to get into the market and also to refinance, in particular over an interest rate, tightening cycle. Now we've got the RBA stepping down, and a probability of the rate, rates going down again in July. Every single person who's got a mortgage is no doubt looking at that, and we're out there also promoting that you've got to go and see your mortgage broker. So hopefully that'll have a really fantastic impact as well. So my guess is it is going to drift further north above 80. I think when we compare overseas markets, what we see in the UK is mortgage broker market share is above 90%. And I think it's, early 90s as well. So I think there's further trajectory. Maybe there are some consumers who choose to use a digital, mortgage offering. I think it's one of the most complex financial decisions you can make. Yeah. But everyone says the product's homogenous. Like mortgage is homogenous. It's not. I think there are so many different solutions, so many different lenders and options. All of that plays into, again, if you think about it, you start wanting to get into the home loan market, you've got no experience. Even navigating home, government schemes in Australia is very, very hard. That's where a broker comes into play. You want to look to refinance. You want to understand the breadth of the market. That is what a broker does through their extensive lender panel. Or you sort of get further on in life, you want to invest, what options there. And then I sometimes make this sort of joke with me. Sometimes it's just being time poor. So many of us are time poor. I love the fact that I can just call my broker and go, okay, I have this idea and I'm thinking about doing this. And they spend the time with you around your options as well. And I think all of that is invaluable. So I think what I'm trying to say is wherever you are on your property journey, there is value in that. It's not, it's not just sort of a one size fits all. It's very personalised for where you are and what you are looking to achieve.
And it needs to be personalised now because everyone has a very personal scenario. And gone are the days, I think, where, a young couple who have their first or second jobs and no kids walk into a bank branch with some PAYG pay slips and some savings and they go, yeah, here's your home loan, right? It doesn't work like that anymore. And by the way, I don't know if you've ever walked into a bank branch recently. It's probably one of the most miserable places to actually. I never get anxious about anything, but as soon as I walk to a bank branch, I know I'm going to be disappointed because they're going to go, yeah, you got to call someone up. You don't really get a result. The world's changed, but back to mortgage broking, particularly with the audience that tune into this podcast. I think about myself. Good luck a digital solution doing my home loans with complicated trust structures and incomes and that's most people now who are investing in property aren't vanilla. And really the only pathway for them will be to get the outcome they want is a mortgage broker. Most people that will probably tune into this podcast, if they walked into a bank branch and said, I want to borrow some money, the banks would just go, no, you don't fit into our way of viewing things. And that's the sophistication of the home loan officers, I would say. I don't want to beat them up, but they're not going to have the same sophistication of mortgage brokers and or the optionality of choice that they have. You're probably not going to fit within their policy. And again, why you need to be using a mortgage broker. So I think we're pretty clear on this as a sector for this particular audience around it. I still I'm curious around how there's still mis and disinformation in and around mortgage brokers and why it still rears its head around brokers are more expensive. You're going to get higher rates if you go to a mortgage broker. A mortgage broker will only put you into a home loan where they get the biggest commission. This stuff still exists. And I know you're doing a bit of a campaign at the moment. I saw it on YouTube sort of speaking to consumers around this sort of stuff. So it still needs to be done. It still needs to be done.
Yeah, I think it's also, it's an industry that's grown very quickly. And that is, as you say, Phil, it's a big part of our role just to continue to promote why it just makes sense. It's, we could talk about this forever. I think you and I are both equally as passionate around it just makes sense. Most people, how often even if you're investing, would you buy multiple properties a year? Even if you're buying a couple properties a year, you're not in the market regularly. So how do you know what's really happening? And that's where you need to go and have a relationship in the same way you have a relationship with an accountant or, your lawyer to help you navigate this and make it easier for you.
Well, I think it's clear broker market share should increase and looking at the UK paradigm, yes, it's something that hopefully we can emulate that. More Australians getting optionality of choice through using mortgage broker. What I would say about the UK is that the mortgage broker does more than just mortgages out there. They do a lot of insurance stuff, and I think that's an upside opportunity for the mortgage broking space, probably outside the scope of this. But, choosing a mortgage broker is key, and I want to have a chat about that really quickly. We'll just go to a quick break. Stay with us. Back in a moment. Welcome back, Phil Tarrant, host of the Smart Property Investment Show with Anja Pannek, CEO of the MFAA. The voice of mortgage brokers in Australia. Now, you sit sort of in this sort of intersection between banks and aggregators and mortgage brokers. For those of you who aren't sort of technically across this, it's called the third-party channel. So essentially, mortgage brokers don't deal directly with banks on a one-on-one basis. They operate through an aggregator. So you could think of someone like a Connective or a Plan or a Choice or a Mortgage Choice, brands like that. So they sit there and they sort of provide that interface with the banks and the mortgage brokers. More and more people are attracted into mortgage broking. Give us a sense for the new generation of mortgage brokers coming through, your millennials and your Ys now, which are finding, attractive proposition profession inside of mortgage broking. No doubt they're sort of growing and evolving along with borrowers. You sort of got to remember that there's 20 or 30-year-old borrowers out there, right? Not sort of old guys like me. What's the new cohort like coming through?
So I think they are incredibly excited at the prospect of what you can actually do, which mortgage broking offers, which is you can work with clients. It's finding solutions. You can run your own business, build your own team. And I think with a generation, and not to be ageist, but I'm probably in the older generation as well, but, really quick and agile to adopt technology that many of us just interact with every day and much more sort of open to take that on as well. Now, that's not about taking the human element of what they provide their clients out. I think they're just much more open in general, what we find, for finding ways to introduce tools into their businesses that help them spend the most amount of time with their clients.
Yeah.
Because that's the magic. It's actually sitting face-to-face across the table from someone, if that's part of your delivery model, working with your client, saying, okay, hold on, let me talk to you. What are you really after? What do you really want? Let me talk you through your options here. Have you thought about this? Have you thought about that? I think that's really exciting as well. Mortgage brokers are predominantly small and micro businesses. And they're able to adopt new tools and technologies very, very quickly, but keep it real, which is what people want. You know, you want to be able to eyeball and get that sense of, it's so important as well. It's so important when you're making those really big decisions in life.
Yeah, I've been really impressed by the new sort of cadre coming through, and I go to a lot of broker-based events as you do, and they've got a real spring to their step. What I think this podcast in many ways, we've really been a sort of incubator, I think, to introducing a lot of people into the idea and the career of buyers agencies. So what typically happens is that someone has a job, they start investing in property, they go, I like this property investment thing, I can actually see a pathway through it. I love it so much, I want a job in property, and then they go and become a buyer's agent. I would say that another great career choice for all of you tuning into this or you're listening to this, have a look at mortgage broking. You know, if you want to work in and around property, mortgage broking, number one, it's a really interesting, engaging job where you can actually really contribute to people's life. It's really tactical, it can be super strategic, and I think there's a longevity in building out mortgage broking businesses into the future with the complexity of borrowing coming through. So have a think about mortgage broking as a career rather than going into the space of just being a buyer's agent, of which there's sort of plenty of them out there. So no doubt you can go to your website and work out how to become a mortgage broker.
Yeah, it's such, I can see this as well. It's such an incredibly rewarding career as well. With those core skills, it's like solving problems, close to property, and seeing the impact, as you said, Phil, of changing people's lives. Like, that's phenomenal when you hear stories of that.
It's where it happens, right? Yeah. You know, property being the tool that can support people's wealth creation journey or their retirement journey, whatever it is, right? Most people can't do that without mortgages. And we always say on this podcast that property investment is a game of finance. And the best brokers I know are really able to strategically work with their clients to do that. And it is an art form. It's very scientific, but there's also, quite a lot of psychology in it as well. The best brokers I know are marriage counsellors. The best brokers I know are career coaches, the best brokers I know, like all these different things, right? They're not obviously within the realms of where they offer advice, but they're the centerpin of a real smart wealth creation strategy. Absolutely. So how do you know if your broker's any good, Anja?
Well, first start, I'd say make sure they're an MFAA accredited broker. And the reason that we hold that out as well is that we know that they're the most qualified in industry, the most professional. We've got the highest requirements in terms of ongoing, continuing professional development as well. And we offer a self-regulatory framework to ensure that conduct is spot on for MFAA brokers as well. And if you want to find an MFAA accredited broker, you can go to Find a Broker, our MFAA website as well.
So you can just go there and just go, find me a broker in my area.
Yeah, exactly. Yeah. And connect with them, or, a really common thing as well is talk to your family and friends. And see who they have used based on particularly what they were looking to solve, and if that suits you. And, spend some time meeting a broker and seeing if they meet your needs.
So when you did that sort of dance around whether or not I want to use a mortgage broker or whether or not this mortgage broker is right for me, what sort of questions would you ask?
So I think it's like any trusted professional relationship as well. So look to the experience, look to what particular clients they specialise in or have helped over a long period of time. There's also this sort of human connection as well. I think, we've all had examples where we've gone and seen maybe a doctor or a lawyer, an accountant, and it just doesn't feel good because you just don't have that connection because you feel like you're not being listened to. And you're not getting the guidance you need to navigate that as well. So there's a bit of sort of trusting and being clear on what you want and making sure you ask lots of questions as well.
Yeah, I'd completely concur with that. And for a mortgage broker to do their job as effectively as possible, you've got to essentially strip yourself naked, right? Like you've got to give all your information. The better off you
metaphorically.
Metaphorically, literally. Metaphorically, you need to, like that. You can't, you don't want to be hiding anything from your mortgage broker because if you're getting assessed for finance, most things get picked up. So a mortgage broker can really do their job well if you're completely open and honest with them. You tell them what you're trying to do and give them the state of play. And a good broker should be able to orientate, a scenario for you, and that's what mortgage brokers do really well. There's going to be times when you outgrow your mortgage broker, and I've seen that with certain property investors. Some mortgage brokers are great at doing sort of, first home buyer finance, but when you start getting into really deep, complicated trust-based lending and maybe in and around your self-managed super fund, sometimes the broker you have today isn't the broker that you'll go through in the future. And I see a lot of people sort of, changing brokers as they go down that career path, and that's just a maturity level. And good brokers keep up. Good brokers can perpetually upskill, and you're saying that MFAA brokers are always looking for professional development. And there's always new ways of doing things, right?
Absolutely, yes.
Yeah. Okay. So when you chat with mortgage brokers, no doubt they tell you all the good things about being a mortgage broker, and they probably tell you all the things that they don't particularly like about me being a mortgage broker. What are they sort of challenged with at the moment, mortgage brokers, if you're sort of going to do a snap poll?
So I think things when it comes to working through loan applications are still a hell of a lot harder than what they need to be.
Yeah, okay.
Mortgage brokers just run defence for their clients. They do so much of the heavy lifting, so you don't need to. If it's getting paperwork together, dealing with the lender, chasing the lender, chasing where things are. We're supposed to be a largely digital economy, but it is crazy that there are still processes in banks that are like from, I don't know, it feels like the 1990s.
I had to do a mortgage discharge the other day, and it had to still be a wet signature.
Yes,
Yeah.
that is a clear example. So one thing we're really hot to trot on is that discharges is an area, the ACCC looked at it in 2020. We haven't had any progress. We did some research on it the year before last, and it highlighted at that stage it was taking as long to discharge a mortgage as it was in 2020. So we think there's a huge opportunity for lenders to get on board. Can we just have one form? Sometimes you can't even find the form. That drives our members absolutely insane. You need wet signatures.
Yeah.
It's 2025. That shouldn't be the case. And I think what's really important is with 77% of mortgages going through mortgage brokers, your broker should be able to act for you in every instance as well. That is what the lender is paying them to do. That is what you expect them to do as well. So we see lots of opportunity for improvement either through, lenders stepping up to the table as well. The other thing I think that sometimes does, and no doubt it comes up, just it's referred to as channel conflict as well, where you'll get a well-intentioned bank employee not recognising it as a broker client and just creating confusion as well overall. So I think respecting the priority and the importance of broker relationship with their client is very, very important. And that's something we, will always advocate for as well.
Yeah, absolutely. And I still get it, whenever I have to speak directly to a bank, which I reluctantly do from time to time, they'll try and sort of say, come over here, I can give you sharper rates. And I go, no, you can't, really? Do you want to go this pathway? It'd be very, very good. But, it happens. So what I would say to mortgage brokers is that they're hugely resilient. And for a lot of people who use a mortgage broker, you probably don't actually understand and appreciate the machinations of what they do on a day-to-day basis and a lot of the frustrations they have, sitting on hold to speak to lenders still for, long periods of time. And, brokers are often not thanked for the work that they do. And I always counsel property investors to absolutely see a mortgage broker as a partner rather than just someone who's working for you. You've got to be kind to your mortgage broker because brokers are humans as well. And you won't say this, but I'll say this, is that brokers are always going to prioritise the clients who are really good to work with. If you're rude and nasty to a mortgage broker, they're probably not going to want to work with you. It's like any sort of relationship. So it's my job really on this show is to help people get better results out of their property investing and, treat your broker very well. It's a tough job and they're really supporting you, no doubt, not only today but into the future. But they're helping Aussies in home ownership, whether it's property investment or owner-occupiers. I want to have a chat about that, Anja. We'll just go to another break. Stay with us. Back in a moment. Welcome back. Phil Tarrant, Smart Property Investment with the CEO of the MFAA, Anja Pannek. Now, we spoke about at length on this podcast as we were running up to the federal election. Both the government and the opposition had grand plans around how they're going to shape housing affordability being a motherhood issue for all Australians. Australians have a love affair with property, rightfully. I've been sort of quite vocal on this show saying that maybe we need to reframe what home ownership means in Australia. And a lot of people still aren't comfortable with the idea that home ownership may be living in a high-rise apartment rather than a quarter-acre block in the suburbs, which is the very sort of 1950s or 60s monkier. But it's very important. Brokers play an important role here. You spend time with regulators, bureaucrats, politicians. Do they really care as much as they present themselves on TV or in the papers around housing affordability and home ownership?
I think they do. I think they do because the people they represent who have voted for them know how important it is. We've got a huge housing supply issue in this country, and this is not something that like an overnight issue. This is an issue that's been like a slow-moving train crash that's been coming for a very long period of time. The mortgage brokers deal very much on the demand side of the housing issue here in Australia, but on the supply side, there are significant challenges, and I think that probably plays into what you were talking about, your perspective that what home ownership means, because we are so supply constrained in this country, at least until there is a long-term plan, a government plan at multiple levels, every level of government to address that. Australians may need to reframe that in the nearer term. It's really interesting when you compare home ownership rates here in Australia, and then you compare them to countries overseas as well. We know roughly about 2/3 of Australians own their home either wholly with no mortgage or with a mortgage as well. You compare that to other countries like Singapore. I know the government structure is quite different in a country like Singapore where home ownership is closer to 90%. Now, it's a stat, but I think there's also a whole lot of studies into the importance of home ownership, what it does to wealth mobility. No one can deny that. Wealth mobility, prosperity, education levels, social wellbeing, a whole lot of other things as well. The dialogue on what we're going to do around housing supply and fixing that over the longer term, and this government and whatever the next government is stepping into, that's just so important in my mind overall. And it's a plan that should not just be defined by, well, hold on a second, we've got a certain election cycle in this country. I think we really need a long-term plan in this country to address that, bringing all parts of government together to look to solve that. Now, that sounds very aspirational, but if we don't, we're going to end up with a country where, we end up with more people renting than owning their home. I think that's quite damaging, potentially over the longer term. But what you want to own, yes, I think in terms of the need to potentially scale down, should it be an apartment? Probably it's still a foot in the door, whether you're rent vesting or what was the phrase you mentioned to me earlier? Stay vestor, which is, I've just learnt something today as well.
Vesting, stay with mum and dad, invest in property, which in many ways is a great tool for parents, and you hear this well-worn patter around housing affordability. And I take umbrage to it sometimes because I sit there and I go, they go, housing in Sydney is unaffordable for average median sort of Australians. And I go, you can still buy a 3-bedroom apartment in parts of Sydney for 300 and something grand. Like you can do that. You can do that today. And that's very affordable for an average Australian. The counter to that, average Sydney side, the counter to that is, well, I don't want to live there, or it doesn't suit my needs, or et cetera, et cetera. I think the opportunity around housing affordability is a late approach for supporting people frame and shape their journey, that they're thinking about what their Chapter 10 property is rather than what their Chapter 1 property. I think the government can help a lot in this regard. They're putting a lot of stimulus in place around it. We see that sort of coming out through the election and now coming into play subsequent to it. It just needs to be a reshaping of the narrative around it. I think we can go a long way to supporting that, but that doesn't help the supply side of things. And we're spinning our wheels, and everyone can clearly see it. We've set these ambitious targets around it all. We're so far away from it. We need good structural change, and we're not far from the Harbour Bridge here, which was built nearly 100 years ago, which was way too big for what we needed at that point in time. We don't have that same framework today for looking at this housing problem because it's a 3-year election cycle and everyone's just worrying about getting re-elected. I don't know how it's going to be resolved. So unfortunately, I think we're going to be looking down the barrel of reduced home ownership unfortunately. Hence the reason why they're maybe trying to counter it with sort of build-to-let type models, which is quite popular in places in Europe. But I don't know what we do. But I know you guys are fighting the good fight down in Canberra, trying to assist as much as possible with it. But I think it maybe is a problem too big to resolve at the moment, unless there is some big, huge structural change.
And you know, as I said, I think almost a multi-generational cross-government plan to reduce red tape.
Yeah. I saw the Treasurer come out last week saying, hey, he wants to start reducing red tape. But governments are notorious for just introducing more red tape to try and regulate the fringes rather than let the economies run. I think places like Singapore are a little bit more open to championing those sort of things.
Yeah, I think also where does the mandate to promote home ownership exist in our regulatory framework? We are a highly regulated country that's stood Australia in incredibly good stead through things like the GFC. You know, we're an incredibly prosperous country. But the crazy thing is nowhere within the mandate of any regulator in the financial system, across the financial system in Australia, is there a clear direction to promote home ownership. That's something we called out last year as well when we participated in the home ownership inquiry, and I think that's a really good starting point as well, because when you set regulation, which ultimately leads to red tape, it's not through the lens of how do we promote, and I think those guardrails with that start to promote different thinking about what should or should not be done, at least in the regulatory side of the banking system here in Australia. The supply side, that's a whole different...
And I think therein lies the issue. I think we're reasonably well configured to support home ownership. You know, philosophically, it's ingrained in the national psyche, this idea of home ownership. I agree with your point that, you know, this is the issue with property in Australia, and this maybe this podcast specifically is that people use it as an investment vehicle. It's a good place to invest your money because the returns on it from a long-term sort of capital growth building play are substantial. So, yeah, this is this dichotomy of people saying property really shouldn't be seen as an investment. It's where you live. It's where it gives you safety and security and raise families and, you know, have a healthy, happy family. And I completely get that. So I think we get it right other than the supply side. You know, we're just making it nigh on impossible for us to build the properties at the speed and scale we need it. And I think a lot of that is bogged down in red tape at the local and state levels. You know, we need to remember... And property investors typically get beaten up a fair bit around, you know, getting all the advantages from it. But the property economy sustains in many ways most aspects of Australia. I think we employ 1 in 8 Australians are somehow connected with the property economy. It's where most Australians value in their superannuation funds probably sits with the major banks, which is underpinned by property.
Yes.
But property is everywhere. It is critical infrastructure for Australia. And we get it right largely, but the bit that we need to get most right is the bit that we get most wrong. And that is building more property.
And I think, you know, we're about to go into a series of state government budgets as well. So, and we're hearing, you know, pretty clearly from a number of, not all, but from a number of the premiers as well, that their desire to cut red tape, and also with the Productivity Commission, you know, and the Treasurer Chalmers announcing what can be done there. So I think we need to see proactive steps. I know, you know, businesses large and small right across the country would welcome that, and I'm sure the building industry would as well.
Yeah, well, you've got the big Productivity Commission review and the Productivity Commissioner, you know, a pretty close circle of who they typically bring into those things. And again, it's a structural thing. You know, I don't think SMEs really get much of a voice at those type of things, even though they employ most of Australians and probably the heart and soul of productivity in Australia. So it's a lot to criticise when you sit on one side, you know, around how it could be done better. But I think everyone's intent is pretty good, including politicians. You know, I know a lot of politicians, as you would do as well. That's a tough job. Like, you know, there's such a commitment on their time, energy and effort to do the work they do. It's a real calling for people to public service, and they never really get appreciated for what they do. But I don't know how it's going to be resolved unless something drastically changes.
Maybe we can come back here in about 5 years' time and compare notes and see and critique what.
But maybe we should do. Maybe I should start a little scorecard. I saw today in the paper the coming up for a budget here in New South Wales, and it was a glowing story around how the losses aren't going to be as big as what they originally thought. And I sit there like just as a a property investor and go, like, why we sort of patting ourselves on the back because we're not losing as much money as what we thought, and therefore the debt cost against that is better. We can put it back in the system. It's something structurally not right with this, or I don't know, but a lot needs to be done on the supply side. But how and where mortgage brokers can play a role in that? Well, the guardrails are out, the flags are out. Choose your sort of analogy, and mortgage brokers can play a critical role in helping Australians shape the opportunities through investing in property, whether it's owner occupied or property investing. You invest in property investor? Like property?
I have a little portfolio as well. I do.
And you use a mortgage broker?
Well,
it must be hard not being
call out to my mortgage broker, Andrew. He knows who he is. He's amazing. He's been with me for probably the last decade through a number of sort of property investments and sales. And does a good job. Oh, he does an awesome job. Yeah. He does just incredible job, and dare I say, can I say this? I think you've almost changed my life as well, because, you get to inflection points where you're like, do I go here or do I go there? And he goes, well, no, actually you could do all of this if you really want. You just need to follow these steps as well. So that's been immensely useful.
So being in and around mortgage broking for 15 years or so, like, it's matured a lot. It went through the days where people were sort of throwing around terms like cowboys and, these operators doing this, that and the other. We're largely beyond that now as an industry, and call it profession if you like. What more needs to happen, do you think, in and around mortgage broking for mortgage brokers to continue to cement their position as a trusted advisor when it comes to property-related transactions? Like, the legislation there doesn't need any more legislation. I think there's an intent around upskilling for mortgage brokers, and that's embracing maybe tools and technology and stuff like that. Mortgage broking, largely from a bureaucratic sense, can be left alone for the foreseeable future, I would say.
So regulation, I think where it is at the moment, is absolutely fit for purpose, but it's always in context of how the environment is evolving. So one of the things we're always alert to, has something changed? The regulation that mortgage brokers operate under wonderfully is principle-based. It's not tick a box, and that means it's very flexible and scalable, whether it's responsible lending. Mortgage broker best interest duty enables, it really provides for that hyper-personalised service that a broker provides to their clients. I think, an example of an evolving environment are things like cybersecurity, cyber resilience and risk. So one of the things, and when we come back in 5 years' time, I know this is going to be true, but
we should get you back before then, I think. But,
one of the things we definitely see is that something not a lot of people know about, CDR, open banking, is something that is going to change how clients work with their brokers as well. And that, that is coming very, very quickly. That's an example where you'll be able to provide your mortgage broker as your trusted advisor with access to all of your bank accounts and all of your financial information with consent as well. It's going to make the process even more seamless. That's an example of how the regulatory environment should be evolved and has been evolved. That is going to make sense as well. But I agree with you. I think the regulatory environment when it comes to consumer protections is absolutely fit for purpose.
So if you don't have a broker, you can find them on the MFAA. But I sort of made reference of some of the sort of, I was seeing it on YouTube and stuff like that. You're really sort of pushing a boat out in engaging with consumers at the moment. So keep an eye out for that, no doubt.
Yes, for wherever you are on the property ladder, take the time to find an MFAA accredited mortgage broker.
There you go. And if you haven't been convinced yet to use a mortgage broker, I don't know what else we need to do. And if you need a hand finding a mortgage broker, come and have a chat with us. I can always steer you in the right direction. I know many, many mortgage brokers and they're all very, very good operators. So thanks for coming in, Anja. Enjoy the chat. I think when you're in town, we should grab you. And I think we've just really covered just the surface here. I think we go a lot deeper in terms of leveraging mortgage broker capabilities now and into the future, and also helping sort of shape narrative and awareness around it as well. So I do enjoy it and I appreciate you coming in.
Thank you.
Nice one. Thanks, everyone. Remember, smartpropertyinvestment.com.au. Find us on social media. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.